Wondering where we are in the real estate cycle? Are we crashing? Is it a good time to buy? Good time to sell? Good time to wait? Well, by the end of this video, you're going to know exactly what the best move is for you and your family when it comes to purchasing real estate out here in Oahu, Hawaii, and where we are in that real estate cycle. So stick around to get all the details. See you on the other side. All right, guys, like I mentioned in this video, we're going to go over the concept of the real estate cycle. Yes, here in Hawaii, we do have a very strong market, but as you've probably been seeing in the media and the news, that we are seeing a shift in the market with higher interest rates, more inventory, and lots of other things that are giving us signs that we are seeing prices coming down and a shift in the market. Now, the big question a lot of people have is, have we hit the bottom? Is it a good time to buy, good time to sell, or should I wait it out? Well, in this video, I'm going to go over the real estate cycle and more importantly, some clues that shows us whether we're in a buyer's market or a seller's market. So before we jump into that and dive deep into it, let me quickly introduce myself if this is your first time here. My name is Patrick Longley. I'm a licensed real estate agent out here in Hawaii and have been for nearly a decade, helping buyers, sellers, and investors with their real estate needs. If you guys have any questions or need any assistance, got my contact information right here, or you can directly DM me on any of my social media platforms. With that being said, let's jump into understanding buyer's market, seller's market, and the real estate cycle and where I believe we are in that real estate cycle. So the first thing we want to understand is seller's markets and buyer's markets. What tells us which market we're in? Now, the first thing we want to look at is the seller's market. Now, there are 6 things that give us signs that we're actually in a seller's market. The first one is low inventory. Obviously, if there's not a lot of options for buyers and there's a slim amount of actual inventory or houses on the market, it's simple economics 101 where supply and demand is uneven. We have a bunch of buyers who are really interested in purchasing a property, but not enough houses to sell. So with that being said, we can see that supply and demand are uneven and we see the prices go up, which shows us and tells us we're in a seller's market. The second thing is high rents. If we see that rents are actually going up year over year, month over month, that tells us that we are once again in a seller's market for buying and also for renting. The third thing is obvious, high prices. If we see that the prices of homes are continuing to go up and up and up month over month, year over year, that tells us that we're in a seller's market. The fourth thing is the market being very competitive. When you go to submit an offer and you talk to the listing agent and they tell you, yeah, we already have 5, 10, 15, 20, or 30 offers, that's a quick and easy sign to tell you that you're in a seller's market and you're gonna have to pretty much give up your firstborn and about $100,000 of extra cash on top of the actual offer price if you want to get your offer accepted. The fifth sign that we're in a seller's market is low interest rates. Generally, what we see happen is we have low interest rates, we increase the amount of buyers, which means that there's more competition when it comes to you actually purchasing a home. When everybody has access to very cheap money, everybody wants to buy a house, so we have tons of buyers, and generally you pair that with low inventory, that gives us a seller's market driving the price up. And the sixth sign that we're in a seller's market is if you see lots of new construction. Generally what we see happen, and you'll see in the real estate cycle, as when we see that people are buying homes like crazy, developers want to get in on the game, so they start building more inventory to help facilitate the lack thereof and actually start selling homes very quickly and start building a lot. So seeing new construction or seeing new construction signs tells us once again we're in a seller's market. Okay, now let's flip to the opposite side, a buyer's market. What are the 5 signs that I see that tells us that we're in a buyer's market? The first one is oversupply or high inventory. If there's a lot of options and lots of properties that are actually out there for buyers to purchase, then buyers have more options and more time to make a decision. Generally, when that happens, sellers sit on their property a little bit longer, become a little anxious, and tend to sell their property below asking price. Number 2 is high interest rates. Just like we saw in the last 6 to 12 months, the Fed has come out and actually jacked up interest rates to slow down the economy and further slowing down the real estate market, simply because it's more expensive to borrow money and your affordability when interest rates go up, go down. If you watch this video right here, I go over this concept of the rule of 10x that kind of further explains why interest rates are so important and when it comes to affordability and buyers. But to summarize it really quick, the concept you need to understand is for every 1% interest rates go up or down, your affordability goes up or down 10%. To give you an example, if you were to purchase a property at a 3% interest rate and you got qualified for $1 million, if the next year or the next couple months it went to 4%, your affordability just went down 10% to $900,000. So that same monthly payment now just went from you being able to buy $1 million house to a $900,000 house. And that can really shift the market towards buyers because less buyers are going to come to the table because they've gone nudged out of that purchasing price market. And the fifth thing you'll start to see is low construction or not as much new development. The reason why is because once again, it's more expensive for developers to actually purchase materials, get loans and things of that nature to develop more properties. And more importantly, they're not having as many buyers coming to the table, so they're not pumping out as many homes as they were before. So those are the 5 signs that tells us that we are in a buyer's market. Okay, now that we've seen the 6 and the 5 signs for a buyer's market and a seller's market, let's look at the real estate cycle, and I'll give you my prediction on where I believe we are actually in that real estate cycle. Okay guys, now this is the real estate cycle that I was alluding to earlier. Now the real estate cycle itself has 4 different phases, and I'm gonna go over where I think we actually are in this real estate cycle. Now the first thing we wanna understand is, what are those 4 phases? The first one we have is the recovery, expansion, hypersupply, and recession, which is a hot word that we've been hearing a lot in the media. Now, there are a couple clues, as we mentioned and alluded to earlier, that kind of tells us which part of this cycle we're in. Now, before we go over that, the one concept I really want to drive home to you guys is, first off, it's very difficult to time the market. And the main thing to understand is purchasing a home is not about timing the market, it's about timing it which is best for you and your family. But if you guys have time to wait and can maybe make some better decisions for yourself to time it accordingly, we can get a general idea of where we want to be in this real estate cycle. The general rule of thumb is we want to be on the bottom half of this real estate cycle. Either on the way down we want to purchase, or on the way up we want to purchase, so we can maximize our profits up here. And this is technically where you'd want to sell. So with that being said, let's take a look at each one of these recovery phases, and let's try to figure out where we think we actually are in the real estate cycle. Now let's start with the expansion phase, because this is probably what's going to really resonate with what we saw about 6 to 12 months ago. Now you guys can probably remember it was very difficult to find rental properties. Prices of properties were going up exponentially, people putting in 10, 20, 30 offers and going way over asking. These are all easy flags to show us that we are in the expansion phase. We additionally saw that there was a lot of new construction coming out. Out here in Hawaii, we saw that Ho'opili was offering all these different development projects, and they would offer 5 properties and there would be 150 applicants simply for that property. So that was a quick sign that we saw that we were in the expansion phase. Now in the hypersupply stage, we start to see it shift down. Now that comes back to the buyer's market and seller market clues that tells us where we are. And one of the big ones is an oversupply of inventory. When we start to see that more inventory is on the market, they're sitting for longer, these are clues that tells us we're in an oversupply scenario when it comes to the hypersupply phase. The next thing we start to see is high vacancies. Are we seeing that people are not renting places as fast? We're seeing the places and properties are sitting longer in regards to renting or selling the property, days on market increasing. This tells us that we're seeing higher vacancies. The next thing we'll start to see after those 2 clues is declining prices, declining rents, and declining construction. We're seeing less construction happening with Ho'opili right now. They don't have 150 applicants anymore. They're doing first come, first serve. It's really giving me a clue that we may be in this section of the actual real estate cycle. We're generally seeing that the list to sales price ratio is 95%. To give you guys an idea of what that means, if you listed your property for $1 million, you would get generally and on average 95% of what you listed it at. So that would be 950 grand. That tells us that we're seeing a declining market because prices are going down across the board, specifically out here in Oahu, Hawaii. Now the next phase would be the recovery phase. This is when basically we'd probably see the interest rates go down, money becomes cheaper for people, the supply that was there and tons of inventory starts to get absorbed by those buyers who are actually leveraging those low interest rates. And then we would go into a phase where we'd see, once again, low vacancies, property selling faster, and then slowly creeping into the expansion phase. Now, if I was to make a prediction, I would say that we are definitely in the bottom half of this cycle. Now, do I think we're absorbing the excess supply? Not quite yet, because interest rates haven't come down. So I believe we're basically right in this area right here. In my opinion, I believe this is a great time to buy because we are at that bottom half before it starts swinging up, where you can really dive into those profits and sell up here. So if you're a buyer, I would highly suggest that you get interested in real estate and start shopping around, because there are some deals to be had. Although interest rates are high, the game plan is to refinance when interest rates come down, because they will come down. It's just a matter of when. So if you can wait it out, this would be a great time to swoop up some great deals. Okay guys, so as you saw in that chart, we are definitely, in my opinion, in a buyer's or balanced market. We're definitely on the bottom half of the actual real estate cycle. So are we in the top corner or the actual quarter side, or are we actually at the bottom? I don't actually know, and time will tell, but I'm very confident to say that we're definitely on the bottom half, and that should only be your general focus. Am I in the top half or the bottom half when it comes to trying to time the market? Now, one thing I want to reiterate, guys, is it's not about timing the market, it's about time in the market. But if you can somewhat adjust when you make certain decisions, it can really set you and your family up for success when it comes to building wealth through real estate to ride that cycle on the way up and preferably sell on the top. With that being said, guys, if you guys got any value out of this video, if you could do me a huge favor, it really helps with the algorithm. If you could smash that like button as well as click the subscribe notification bell so you can get notified whenever I drop videos just like this. And if you need any assistance or have any questions, got my contact information right here, or you can directly DM me on any of my social media platforms. With that being said, I'm Patrick Longley with PatrickLongleyRealty.com, powered by eXp Realty. Hope you guys have a beautiful day. I'll talk to you soon. Aloha.